As the housing market starts to cool down, you need to be aware of what's going on if you're looking to buy a home or if you own a home. That way you can keep the most money in your pocket, and that's what we're going to be going over today. What's up everybody, I'm Jaspreet Singh from theminorityMindset.com, where money minds rethink rich. Buying a home over the last year hasn't been very easy. I purchased a couple investment properties in 2021 and it took more work than before because now I had to go through more listings, I had to walk through more properties, I had to make more offers, I had to go through more bidding wars. But the market is starting to shift a little bit. And now, if you are in the market for a home or if you own a home, you need to understand what's going on. That way you can stay ahead of the curve and actually get the home that you want to buy. I've been involved in real estate from a lot of different angles. I'm a licensed real estate salesperson, I'm a real estate investor, and I'm an attorney. But in this video, I'm going to be going over some of the things that you need to know if you're thinking about buying a home this year. But before we get into these 5 things, I need you to do me a quick favor and smash that thumbs up button below. And if you're looking for some extra minority mindset, we have a couple new YouTube channels. We have launched the Minority Mindset Clips channel where you can see some of the best highlights from this channel, and we have our Minority Mindset Spanish channel where you can watch our videos in Spanish. So if you want to check out these YouTube channels and subscribe, I'll put the links to where you can check them out in the description below. If you want to have a chance to get your offer accepted on a home, the very first thing you got to do is you have to be pre-qualified. Although the housing market has been cooling, this is still a very hot housing market. It is still a seller's market, which means you still have way more people that are interested in buying a home than there are homes available for sale. So that means you're still probably going to see bidding wars. You're still seeing a very hot seller's market where homes are getting sold very quickly. It's not as fast or as hot as it was, but it's still extremely hot if you look at the grand scheme of things. So if you want to have a chance to get your offer approved by a seller, you have to be pre-qualified. When you're pre-qualified, that tells the seller, hey, yeah, I know I don't have $500,000 in my bank account to buy this property, but the bank has already told me that they're willing to lend me $500,000. That way I will have the cash to buy a property. If you're not pre-qualified, then the seller has to now wait and hope that you can get the cash from the bank to buy the property. In this market, no seller is gonna wanna do that. If I got 3 offers on a property, one person offered me all cash. They have this cash in the bank and they offered me $480,000, and somebody else was pre-qualified and they offered me $500,000. And then you had person number 3 who didn't have the cash in the bank and they were not pre-qualified and they offered me $520,000. The person's offer, who I would definitely not take, is this person because they're not pre-qualified. I don't want to sit here and lose these potential offers just to hopefully get this extra $20,000 when I know that I can get this money here. Now, between the cash and the pre-qualification, the person I'm going to take is going to depend on how fast I need to sell. If I need to sell tomorrow, then I'm going to take the cash offer. But if I can be patient, then hey, I'll wait a little bit longer and I'll take that extra cash. So before you go out and start looking for homes, you need to get pre-qualified unless you have all the cash in your bank to buy the property without debt. If you want to get pre-qualified in this market, you have to be able to produce 3 things. You have to show your income and prove it, you have to show your assets, and you have to show your credit. When we talk about income, the first thing you got to show is you have to show that you actually have a job. That might be showing pay stubs or other proof of employment, because they need to know that you're making money today and that you keep making money tomorrow. Then they're going to want to see at least a couple years of tax returns. This would be your W-2. So they're going to want to see pay stubs and W-2s, because your W-2 is going to show them that you have been making money consistently, because when the bank lends you money, they're essentially making an investment in you and they want to see that you have been making money. That way they know that you'll continue making money, so that way the bank knows that they'll keep making money. Then they're going to ask to see what assets you own and how much debt you have. So they might ask about your car, your student loans, and if you have any real estate investment properties, they'll take a look at that. If you have money in the stock market, they'll take a look at that. That way they can see, okay, this person is a good investment. Yeah, they're making good money and they own assets, they own stocks, they own other investments. That way we know that we're protected as the bank. And the third thing the bank is going to look at is your credit score. Right now, if you want to go and get a mortgage, you really need a credit score of something around 620 minimum. But if you want to get the best interest rates come somewhere in the 740 to 760 plus range. Anything above 760 is going to be all the same. It doesn't matter if you have an 800 or an 810, you're going to get the same interest rates as somebody does here. But if you want to get the best interest rates, you need to be in this range. You can still qualify for a mortgage. Here, you can even get a mortgage if you have a 580, but then you're gonna have to pay extra fees and extra interest. But if you wanna get the lowest interest rate possible and you wanna save the most money on your mortgage, you need a better credit score, because this tells the bank that you're more likely to pay your mortgage back on time. Once you have your pre-qualification letter, you know how big of a home that you can afford, and when you make an offer, now you can feel confident that you'll be able to produce the cash when it comes time to close on the property. The second thing that you have to do is you need to know how to compete in this seller's market that we're in right now, because we're in a very unique market where sellers have the upper hand. This is just the reality. So now what you need to do is understand how you could get on the seller's good side. That way you can get your offer accepted. The first thing you have to do is you have to be quick. When you see a home that you like hit the market, you need to go see it that day or the next day. You do not have time to waste in this market, because if you wait 10 days to go and see the property, chances are if it's a good home, it's gonna already be sold. So you need to go see this property quick before everybody else does. That way you can make an offer quickly. Then when you make your offer, you wanna make sure you make your offer attractive. If you cannot offer more money, that might mean closing quickly or being more flexible in the closing time. That way if the sellers wanna stay in their property longer, you're flexible with them. Or if the sellers wanna move quickly, you can work with them. You wanna make sure that you express that you are willing to work with the seller with whatever they need. This is also gonna affect what type of concessions you should be asking from the seller, because 10 years ago, we were in a buyer's market where you had a lot of people selling their homes and not that many people buying their homes. So now if you wanted to buy a home, you could ask the sellers to do whatever they want. You could tell the seller, hey, yes, I'll buy your home, but you need to put a new roof on their home, and sellers would agree because they had no other option. If they wanted to sell their home, they had to make concessions for you. Now it's flipped. So if you see a property that has a broken window or if it has some damage on the walls, tell the seller that you'll take the property as is and they don't need to make any repairs. That way you're making your offer more attractive. If there's a lot of work that needs to be done, you can price that into your offer, but you just want to make sure that you're giving your seller something easy. That way they understand that they can just walk away and they don't got to worry about doing any of the work, because you're going to handle that. You want to make sure your offer is attractive, because if somebody else comes in and they say, yeah, I'll buy the home, but I need you to replace this window, and you come in and you say, yeah, I'll take a little bit less, but I'll replace the window myself, the seller's going to sell it to you instead of them. And the third thing that you can try to do to make your offer more attractive is to give the seller a little bit of a love letter. Now, this concept might sound really crazy, but I have seen this work in the past, where when you make an offer, you write a letter to the seller saying why you want to own this home. You say that, hey, I love this property. It's right next to my sick parents. I want to be able to live there and take care of my family. And you just talk about why you deserve to own this home. Sometimes, not every time, but sometimes the sellers are going to read that and they will sell you their property even if you do not have the highest offer, just because of that emotional letter you gave them. So the interesting thing about these love letters is that realtors who are listing the property don't like them, because that might entice their seller to sell the property for a lower price than what they could have gotten without the love letter, which means the realtor is going to make a smaller commission. And so sometimes you'll see listings or even states ban these love letters. Like Oregon just announced that they're no longer allowing these types of love letters, but if you are allowed to do it and you really want a property, it doesn't hurt. And the third thing that you can do to make your offer more attractive is to offer a price contingency. Essentially what this is saying is you can make a $500,000 offer on a property, but then if they get multiple offers, you will say that you're willing to raise the price of your offer up to $550,000 and you're willing to beat any other offer by $5,000. So now what this is saying is, let's say you have multiple offers and somebody else offers them $525,000. That means that you'd be willing to offer the seller $530,000 because you wrote in your offer that you're willing to beat any other offer by $5,000 and you're willing to go up to $550,000. So if you really want a home, you can add in this type of price contingency with that ceiling on it. That way you let the sellers know that you're serious and that you're willing to beat any other offer. The third thing you need to remember when you're going out to buy a home in this market is that you do not want to overpay, because your home is a big commitment. And the last thing that you want to do is you find a home and you fall in love and now you overpay for the home, and now you're stretching yourself thin to the point where now you have to live paycheck to paycheck just so you could buy this dream home that you didn't want to lose. The first thing you got to do is you got to set a cap on how much you're willing to pay. You have to tell yourself that this is the most that you're willing to pay for a home, and that's it. If you lose out on a couple bidding wars, so be it. More properties will come. But you also want to make sure that you're not overpaying on fees, because a home purchase is the biggest purchase that most Americans will ever make. And so it's very easy to get ripped off, because just a 1% difference or a 1% fee can add up to thousands of extra dollars that you don't need to pay. So this is where you got to be a little bit careful. Like if we're talking about your mortgage, some lenders are going to charge you a whole lot more in fees for the exact same loan. So shop around. It's the same with your home insurance policy. If you have a home or if you're buying a new home, you want to make sure that you're shopping around for a home insurance policy, because some home insurance policies are going to charge you a whole lot more than other home insurance policies for the exact same insurance. The easiest way to shop around for home insurance and make sure that you're getting the best price possible is to use an insurance marketplace, not an insurance company, because an insurance marketplace like our sponsor Policygenius will have different insurance companies competing for your business. So now you don't have to call up different insurance companies one by one. You just have to enter your information onto Policygenius, which just takes a few minutes, and then they will show you different insurance options. That way you can compare and pick the option that's best for you. The reason why I like Policygenius is because one, there's no additional cost to you, and second, if you use them and then you find a lower home insurance quote somewhere else, they will switch you over for free. Plus, they can help you keep more money in your pocket, because Policygenius helps their average home insurance and auto insurance reshopper an extra $1,250 a year. So if you're buying a new home, or if you own a home and you want to make sure you're not overpaying on your home insurance, I'll put the link to where you can learn more and get a free home insurance quote with their sponsor Policygenius in the description below. Minority Mindset is a paid partner with Policygenius, so if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more and make sure you're not overpaying on your home insurance, I'll put the link to where you can do that in the description below. The fourth thing you got to understand is where we are in the market, because there's a subset of people out there that are saying, yeah, I do want to buy a home, but I don't want to buy it yet. I'm going to wait for the real estate market to crash, and when the market crashes, that's when I'm going to come in and I'm going to buy my home for super cheap. The only problem with that is nobody knows when the real estate market is going to crash, and nobody knows how big it's going to be. Right now, at the time of recording this video, the real estate market is very hot. It's not as hot as it was, but it's still very hot. What that means is home prices are still growing very quickly. So home prices keep going up, and nobody knows when the housing market is going to plateau. Nobody knows when the housing market will correct, and nobody knows how big this correction is going to be. Plus, when you're talking about a real estate crash, you really got to understand or pay attention to what factors could potentially cause a real estate crash. Because back during the 2008 crash, the factors that led to that housing market crash were: one, you had a whole bunch of subprime mortgages. Second, you had a bunch of ninja loans, which stood for no income, no job, no asset loans. So banks were not qualifying people before they bought a home. And third, you had these variable interest rate mortgages, which meant that you would go out and buy a home, and when you bought the home, your banker would tell you that, hey, your monthly payment's only going to be $500 for the first couple of years, and then it's going to go up a little bit. But what they wouldn't tell you is how much it would go up by. So what happened for so many people is you bought this huge home and you were only paying $500 a month for a couple of years. Then a couple years go by and your payment went up from $500 a month to $1,800 a month, and now all of a sudden you don't have an extra $1,300 a month to put towards your mortgage. And this put so many people underwater on their homes, because now people started selling their homes, they couldn't afford their payments, and now everybody was trying to sell their homes and they didn't have any equity in their homes, and this brought the housing market down, so people went underwater. We don't have those same factors right now. Banks are qualifying people. If you want to go out and get a mortgage, you got to get pre-qualified doing all the things that I talked about. So banks are pre-qualifying people. You're not seeing the same number of variable interest rate mortgages, because most people are buying a home with a 30-year fixed rate mortgage. So if interest rates go up, or if something changes in the economy, your mortgage payment will not change. The concerns that we're seeing now are a little bit different than before, because now the concerns are home prices are growing way faster than wages. And it's not sustainable for home prices to grow this fast while wages are only growing this fast, because there's going to be a point where now people cannot support this higher price of homes because, well, they're not making enough money to buy these homes. This is where our super low mortgage rates are very helpful, because the lower mortgage rates have been making up for the higher prices of homes. And so when mortgage prices start to go up, that could make buying a home a little bit less affordable, which would make it harder for people to go out and buy a home. But we don't know how fast mortgage rates are going to go up. The Federal Reserve Bank keeps saying that they don't want to touch mortgage rates until at least 2022 and probably until 2023. And even when that happens, we don't know how fast they're going to raise interest rates. And if something happens between now and then, if the economy slows down, if people are not going back to work, then there's a chance that they could even delay this mortgage rate hike if they don't feel the economy is growing fast enough. But even if we put that aside, you also have to factor in the time it would take for real estate prices to come down, because the real estate market, the housing market, doesn't work like the stock market. In the stock market, you can see the market crash in an instant, because people have the ability to buy and sell stocks in a second. In the housing market, it doesn't work like that. Buying a home is typically a very slow process. They can take anywhere from a month to a year to sell a home. So if you talk about home prices coming down, it would be a gradual process, because then somebody would have to list their home for sale, and if they don't see any offers, then 3 weeks after listing it, they might cut the price of their home by a little bit, and if they don't see any more offers, then it would take another month before they cut their prices again. So it's a very gradual process. Just like how it's impossible for somebody to time the stock market, it's impossible for somebody to time the housing market. Every asset class, the stock market, the real estate market, is cyclical. There are times when the market's going up and there's times where the market's going down, but it is impossible to time the market. So instead of just trying to time the market, what's better for you is just to buy a home that you can afford. That means knowing how big of a home that you can afford, knowing the down payment, and knowing your monthly payment. If you know these 3 things, find a home that you love that fits your pricing criteria and go out and buy it. See, I don't consider the home that you live in as an investment. Real estate can be an investment. If you go out and you buy an investment property, a rental property, that's an investment because you're buying it for the sole purpose of making money and you're trying to generate some cash flow from that. But the home that you live in, this is something that you're using. It's a liability. It's something that you're just hoping will go up in value in the future, but you're buying it to live in. And so you really need to treat it like that. If you're buying this property as a place for you to live, as a place for your family to create memories, then you got to look at financially the same way. Instead of trying to time the market, if you want to buy a home that you love, that you can afford. Otherwise, you're going to have to keep waiting until who knows when. Not only can we not predict the economy, but we can't predict what the government's going to do, because the housing market has also been partially skewed because of all the government regulations. Things like mortgage forbearance and the eviction program. These things have changed the housing market. And so you got to remember, there's a lot of external factors that you cannot predict and that you can't control. I mean, nobody thought that we were going to have a pandemic in 2020 a few years before that. And the 5th thing that you need to understand if you're going out to buy a home right now is if you're making sacrifices to make your offer more attractive, you want to make sure your sacrifices are reasonable and that they're not going to turn around and bite you in the you know what. One of the trends that I've been seeing happen right now that really makes me want to pull my hair out is when people make an offer to buy a home and they do not have any sort of due diligence contingency. A due diligence contingency is essentially where you tell the seller, hey, yes, I made this offer to buy the home, but after you accept my offer, I want somewhere between 3 days and 10 days to inspect the property. I want to bring in my own building inspector and whatever other inspectors I want, and I want us to walk through the property and see what issues are in the property that we might not see. I have purchased a lot of properties, from single family homes to multifamily to mixed use, and one thing that I will not do ever again is buy a property without a due diligence contingency, because out of all the real estate deals that I have done, there was only one deal, one property. It was a single family home that I purchased without a due diligence contingency, and that single mistake cost me tens of thousands of dollars, and that was the only property that I ever lost money on. This is when I was just getting started as a real estate investor, and I walked through this property and it looked pretty decent to me. It didn't look like anything was wrong, so I made an offer and it got accepted, and as soon as I got the offer accepted, everything went wrong on the property. We had to replace the entire sewage line and the plumbing line because apparently somebody who lived in the property prior to me buying it had took cement and they poured it down the main lines of the drain, so water was not leaving the property. We had to redo the entire mechanical and the electrical of the property, and the roof was not in good shape, so then we had to come in and put in a brand new roof on the property. All these things cost tens of thousands of dollars that I did not expect, and this was just a major nightmare that could have been avoided if I just spent a few $100s early on to get a property inspection before I bought the property. So what's happened now in today's market is people want to make their offer better than somebody else's, and so what they've been doing is first they lower the time of the contingency. Instead of saying I want 10 days to review the property, they said I want 7 days, then 5 days, then 3 days, and now people are saying that they're willing to purchase the property without any sort of inspection contingency. When you buy a property without any sort of inspection, you are taking a huge gamble. Don't take that risk. Even if it's a small inspection contingency, even if it's just 3 days, as soon as you get the offer expected, take a property inspector there the next day and inspect the property. It can save you a fortune. Take it from me, just because a property looks good when you're walking through it does not mean that everything is working good. You have to look behind the scenes. You have to look a little bit deeper, and if you are not a home professional, if you are not a contractor, you need to use a building inspector to help you with that. So do not sacrifice that. Make reasonable sacrifices. The more prepared you are, the better. If you have a good real estate agent on your side, they'll be able to help connect you with whoever you need. They can connect you with a lender if you need one. They can connect you with a title company, and they can connect you with a building inspector. That way you don't have to be the person going out trying to find somebody. If you have a good real estate agent, they'll be able to help facilitate this entire process. Thank you for watching. If you enjoyed this video, here's a video on things you need to know before you go out and buy a home. And while you're at it, download our free guide on how to start generating passive income. And as always, keep hustling. If home values are up when it comes time for you to sell, then you're golden. If home values are not up, then that appreciation is not there. Remember, if the 2008 recession taught us anything, it's that real estate doesn't always go up in value.